In today's video, we're going to talk about a break and retest setup that I took on AMD off a very key 91.2 level, lining this up with a key 4188 demand on the S&P 500. I was very confident in this setup coming into the day. I saw 9120 as a nice demand level to play a retest off of, and I was really liking the trade as it was setting up. I went relatively large on this position. Now, the trade worked out in my favor very quickly, very nicely, but the continuation move was not there. There was a key supply level above at 92, and we saw a pretty harsh rejection of that level. Now, the key to my profitability on this trade was one thing and one thing only. It was the fact that I scaled out of my position as I was getting my profits. I think this is something that is very key for some of you out there that are taking short-term scalps. You have to be creating cash flow. You have to be scaling out of your position when you get a move in your favor. We have seen in this market especially that continuation moves are not always promised, and if we are not locking in profits when we get a move in our favor, we are at risk of giving them back. And the best way that I do not give back profits is I scale out of my position. Now, sure, that means that I am limiting my upside, but this also means that I am limiting my downside. I would much rather limit my upside and make less money than lose the profits that I just had. And if I would have just scaled out, I could have protected myself from giving back those profits. So in today's video, we're going to see a live trade of that AMD trade. We're going to talk a lot about scaling out of positions. We're going to do a live voiceover of my trade so we can really see how I scale out of my positions and how this can protect you from giving back profits. So if you enjoyed today's video after watching it, make sure to press that like button, subscribe. Let's go ahead and jump into it. So guys, this is the last 3 trading days on AMD. This is the 5-minute chart. Now, the key level that I was looking at was this green level right here around 91.2. This was a previous very strong demand back on Friday of last week. This was also a strong demand back on end of day on Friday of last week. So I knew we had some demand step up around this 91.2, 91 level. Now, in the pre-market yesterday, we saw this 91.2 level reject very nicely. We saw it push into 91.2, double top rejection, and a move to the downside. Now, as we were trading into today, if I zoom into just today, we can see that AMD rejected 91.2 in the pre-market, got above it at market open. Right before the market opened, we squeezed above that 91.2. So I knew if I saw a pullback back to that 91.2 level, I would look for that level to turn back into a demand. We got back above that rejection point, 91.2. We got a break, and I was looking for the retest of the previous rejection point here and the previous demand spot here. So I was looking for the break and retest, what I always look for my intraday trades, the break and retest of 91.2. Now, while I was looking for that 91.2 retest, I knew I had a limited upside. I knew that I had supply up here around 92. This were some previous lows from Thursday. We saw some rejections in this 92 level here and a very clear rejection on Monday of this week at 92 as well. So I knew if I was going to trade a 91.2 retest, I would have to make sure that I'm scaling out of this move at 92. If we were to break above 92, I would have some runners. I can maybe lock in a little bit more profits, but I'm not going to hold my whole position into supply. I knew I had to be scaling out no matter how much I wanted that 92 break. I had to have the discipline of scaling out of my position, knowing that supply is above. Now, if we break this down to the 2-minute chart, this is where I primarily trade on the 2-minute chart. You guys can see we had 3 nice 2-minute candles to the downside, and we saw that very quick reaction off 91.2. And I was in this position before we got this big green candle. I was building a position on this pullback, having my stop under 91.2, looking for that retest to move back to the upside. So you can see I was up very nicely on this position. At one point in the live video, you're going to see I was up about $3,500 up here at this 92 level where I started to scale out of my position. I started to see some ugly wicks at this 92. I knew the rejections were coming in, and I was scaling out of this play. Now, you can see what you'll also see in the live video. This candle right here was very aggressive. It was almost too quick to react off of. You'll see it in the live video. It was a straight down flush, seemingly out of nowhere. I was ready for it because I knew supply was there. So I knew it was potentially going to reject off that level, and I was already scaling out of my play, so I was comfortable to see it out. I was comfortable to see if I could get that move over 92 on a nice little runner. But we can see that is not what happened. We got a quick reaction to the downside, and I stopped out of my play when I started to see that downside come in. Now, I'll show you the contracts in the live video. We'll talk about it. You'll see that my last exit on the runners that I had was just about at break even of my original entry point. My original entry point, it was almost break even by the time that I got out. If I was not to scale out of this position on this upside move, if I was not to take profits, I ended up with about $1,600 in profits. If I was not to scale out as I got my push, this trade would have been break even and potentially even negative if I would not have acted and not stayed disciplined with scaling out of my position. So this is a really large testament to how important it is to be scaling out of your positions when you get a move in your favor. With option contracts, if we have that short-term trading mentality, we cannot be overstaying our welcome. We have to understand where our supply is, we have to understand where our demand is, and we have to respect those levels. I knew 92 was there. I knew it was a potential rejection point. And because of that, I was taking profits off the table, protecting myself from exactly what happened today on AMD, a really ugly rejection of 92. So I figure now we can just go ahead and pull up the live trading video, and I'll do a voiceover as we watch that live trade. I'll talk about where I was exiting, my mindset when exiting, as I was watching that supply. So I hope you guys do enjoy the live trade, the voiceover commentary. Let's go ahead and watch that now. All right, guys, so here is the AMD trade. You can see as of right now, it is rejecting that 92, and I'm right now just building a position. Obviously, 100 contracts, it looks big, but it's still in my comfortable size, about a $10,000 position size. Right now, we're pulling back to 91.2. This was the level I was looking to potentially go long off of and take my final entry point. So if you look at my order entry screen on the left, you will see that that 100 position goes to 150. That is my last entry. That is where I am maxed out. I don't want to take any more risk, and my average price is $1.32. Now you can see this move will happen very quick, and I will quickly go from red to green, and I will start to see nice profits on a big push here. Now watch the position, right? Right now it's 150. You will see that when I get this move in my favor, I am focusing on that 92 supply, and I am making sure that I start to scale out of this position on the push to the upside. I know 92 supply is there, and I know that I can't get too greedy on this move. I will hold runners looking for continuation above 92, but I can't continue to hold my whole position. So you'll see AMD still looks pretty strong. We're still getting that upside move. Contracts are up to $1.41. Right now, I'm up about 5% on my position, and I'm still holding my position. I like to typically scale out around 7 to 10%. That's where I start to like a scale out, take some off, 10% win. That's a nice win. I can make 10% more than I can make 100%, right? This is something that I keep in mind. I can be consistent if I take 10%, 20%. If I take those wins, they will amount to profits in the long term. I have to make sure I keep that in mind. So you'll see right here, I'm up about 2,100, 13%, 17%, big push through high of day, and this is where I start to take some profits. So right there, you guys can see I just took 50 contracts. I took a third of my position off. I am now down to 100 contracts. So I took about a 20% scalp there, took some profits off the table, and I started to watch to see if we would reject at this 92. Now around this time, the NASDAQ was also rejecting slightly, and I was concerned that the NASDAQ rejection would cause some downside on AMD. And so momentarily, you're going to see that I scale down to now 50. So as of right now, I am out of 2/3 of my position. I've taken 2/3 off. I've taken, a $29,000, $3,000 winner right now, locked in about 12%, and now I'm going to hold my 50 contracts to see if there's continuation. So guys, this is where the fun and games begin. Right now, I'm up about $2,700. I have my 50 contracts left. You can see my average price is up now because I've scaled out of my original entry. So now my average is 148, but my original entries were around 132. Now watch where my final exit is on this flush that happens. If I did not scale out of this position, my last exit was pretty much flat with my original entries. So I would have went from, a $3,000 gain right here to about flat on the position. I would have lost $3,000 in a blink of an eye here if I did not scale out of the position when I did. So you can see the downside starting to come in. And on the voice chat, I'm starting to say, watch out, we're starting to move lower. Right there, I'm out of my position. And you can see my last exit was around $1.30. So my last exit at $1.30, that is lower than my original entry point. This would have been a red trade if I did not scale out at that 92 high. Instead, I walk away with a $1,600 profit. Now, this is not a very clean trade by any means, right? But the only reason I come out of this trade with profit is because I scaled out at the supply. I knew that there's a possible rejection. I knew that I had to take some profits off. And because of that, I walk away profitable. But without that scale out, this trade goes from $3,000 winner to a red trade. That is something we do not want to encounter as a trader. So that's just about all that I have in this video. This is a video that's mainly focused on scaling out of positions. And in my opinion, in my eyes, as a trader, as a short-term trader, we have to limit our downside. That is the most important thing in my eyes. Limiting my downside is the number one rule when I come into the market. It is a form of risk management, and it's something that I always feel that I have to do. I would much rather limit my upside than expose myself to the downside. I would much rather make less money on a position with the opportunity of losing less, right? So if I'm scaling out of my position, yes, I am limiting my upside potential gains, but at the same time, I am not exposing myself to major rejections, major reversal moves that would potentially give back potentially all of my profits, if not turn me red on a position. So I hope you guys did enjoy today's video, that live trade, a little bit of education on scaling out, why I think it is so important. I hope you guys do implement this into your trading. If you guys enjoyed today's video, press that like button, subscribe, and I will see you in the next one. Peace.